So we're going to talk about a training pricing model. So this is just to help you out, to give you an idea of some numbers that you can punch in and what it may mean. And so we're going to go through this. I mean, there's a lot of numbers here, but by the end of it, you'll be able to do this by yourself. It's quite simple. So just to give you an idea, let's just say that we're in the financial year of 2017, 2018. Okay, so we're just going to call this one 2018. And our gross income for 2018, we made $100,000. So out of that, it cost the company $85,000 to operate, which left us with $15,000. So I said at the start of the year, I wanted a 15% margin or profit was my goal. So to reach that, I could only spend $85,000. Okay, so then we're going to work out the numbers. So let's just say that we do 3 jobs a day, 5 days a week, and we work for 48 weeks of the year. Okay, so still get our 4 weeks off. We still need time off. No one can work 52 weeks a year forever. So we calculate that on 48 weeks. Okay, so that gives us 720 jobs for the year. That's how many jobs we did for the year, was 720 jobs for the year to make the $100,000. So then what we want to do is we want to find out, okay, so if we got $100,000, what did it cost us per job to operate? Okay, so it cost us $118.06 for every one of the 720 jobs that we did to operate in the year, which cost us $85,000. That was our operation costs. Okay? So we do 15 jobs per week. So we're going to multiply this number here, which is our per job cost, times 15, which gives us this number. So our weekly business costs or expenditure for our business is $1,770.83 per week. Now we can cut that down to work out how many hours are in the week. So let's just say we only work a 40-hour week. We don't work overtime, we don't work weekends. So we've done 40 hours for the week. So we're just going to divide this number by 40, which gives us $44.27 per hour is what it costs the company to operate. So once I've got those numbers, I'm looking at, okay, let's just say I had an employee on and was it included in that price. Okay, so that's where all that money went. So that left me as a business owner, the $15,000. If I divide that by 52 weeks of the year, that gives me $288.46 per week of profit. Now I can't live off that, and that's pretty thin margins for the business in case something goes wrong as well. But at least we've got the numbers now. We can work out, okay, for it to cost $185,000 per year, these are our numbers on this many jobs per year. Okay, so let's just throw another number out there. Say we did $235,000 that year, okay? And operating cost us $199,750. That was wages, that was everything. All the costs involved in running the business. At the end of the year, that's what it cost us. I wanted my 15% profit. 15% on $235,000 is $35,250 is my net profit. So if I divide that by the 52 weeks of the year, that gives me $677.88 per week left over as profit. So I did 720 jobs for the year again. So again, 3 jobs per day on a 5-day week for 48 weeks of the year, 720 jobs. Cost per job, so it cost the business $277.43 to do each one of these 720 jobs, costing the business $199,750 at the end of the year. So each week it cost the company $4,161.46, or $104.04 per hour. Okay, so 2019 we wanted to change it. We wanted 20% profit this year. So we still only did $100,000, but to get our 20%, we had to bring our cost down to $80,000. Okay, so 720 jobs. Our cost now is $111 per claim, per job. On this $20,000 profit that's left over, 52 weeks of the year, divide that, equals $384.62 per week left over in profit. $1,666.67 cost to the business per week, or $41.67 per hour. Okay, again, we just added these numbers up. We just changed it from 235,000 with 20% increase, so margin went up from 15 to 20%. Same numbers, 47,000, 188,000 in cost, $261 per job, opposed to 277 per week, per hour. Okay, so that's what these numbers are here represent. Okay, so then we will come down and we're actually going to do, let's say we do actual costs before wages. Okay, so in 2018, what we did is, I've just done this in increments of percentages. So 10% rise, 15% rise, 20% rise. So that's what these numbers are here. So it's still 2018. These are just the different numbers. So $100,000 is what the business took in for the year. It cost $33,500 in costs. So that's running costs. So that's your vehicle, your equipment, your chemicals, your phones, your internet, insurances, all that sort of stuff. That cost the company $33,500 without any wages in there. Okay. We want our 15% profit, so that's the $15,000. We still do our 720 jobs per year. That hasn't changed. That's the 3 jobs per day, 5 days a week, 48 weeks of the year. So now that costs us $46.53 cost to the business, opposed to $118.06, which included wages. So this is before wages. Okay, that's what it cost me per week. That's what it cost me per hour to operate. Okay, which gives, I'm the business owner, say I want to have a potential income of $990.38. Okay, how I got to that number was I minus these numbers here and then divided it by 52, which gave me an average weekly number. Then I multiplied that by 52 to get how much that cost per year. Okay, so this number by this number equals a yearly rate. Okay, so now just to say, take these numbers away here, and let's just say that I just wanted to employ somebody instead of employing myself. So this is self income, so this is a business owner income, but I wanted to employ somebody instead. Let's just say I wanted to employ someone and they cost me $25 per hour. Well, then I have additional costs on top of that, which is their PAYG, their super contribution, insurances, etc. Okay, so let's just say for round numbers sake, it now costs me $30 per hour to have that staff member. So what I need to do is add that $30 an hour to the cost per hour that they cost the business already. So that's $17.45 plus the $30 an hour equals $47.45 per hour is what it costs the business. Multiply that over a week of 40 hours in the week. Multiply that over 52 weeks of the year, because you're still going to have income, because you're still going to pay wages for holiday pay, you're still going to pay all your phones, so none of that stops. So 52 weeks of the year comes to $98,691.67 cost potential for the year. Okay, now we take that number from what we actually earned. So the business made $100,000. It cost the business $98,691.67 to operate, which leaves a net profit of $1,308.33 or 1.308% profit. Okay, now remember we wanted a 15% profit, so therefore we haven't made it. So these numbers don't add up. So you probably couldn't put a wage earner on with these numbers. You'd have to have a look at other things. Okay, so let's increase our total income for the year. So our gross income, so we increased it up to 110,000 now. So with that, it costs us a little bit extra to do some marketing. So now it costs us $36,000 to do a little bit of marketing. So it costs us an extra $2,500 to make $10,000, okay? We still want our 15% profit. So 15% profit on 110,000 is 16,500. We're still doing 720 claims for the year. It now costs us on average $50 per claim. Okay, that's our cost. So this number divided by this number gives us this. We're going to do 15 jobs for the week. So this number by 15, which gives us an hourly rate. So divide that by 40 will give us an hourly rate. Okay, as business owner, these are our business hourly rates again. But let's just say I'm just $30. So now I'm paying someone 25, all the extras cost 30. So we're going to add $30 to this 1875. We're going to multiply that by 40. We're going to multiply that by the 52. And then we're going to take this number from our actual number, leaves us 8,600 in profit, or 7.818% profit margin. Okay, and again, it's under our 15%. So we have to reduce costs somehow to get that 15% where we want it. Okay, we've increased our sales by 15%. It cost us another $3,000 to get that 5. So probably not a good investment, but still, this is what we've done. 15% margin is 17,250 on 115,000. 720 claims for the year. Cost per claim, cost per week, cost per hour. $30 plus $20.31 equals $50.31 times 40 times 52 minus that equals this, or a 9% net profit. Still not enough. We're still under 15%. Okay, we've got 120,000, but it costs us $4,000 additional to make that 5, so still not a good investment. Costs us $59.72 per job, $8.95 per week, $22.40 per hour, $52.40 with a staff member, $2,096 per week, $108,992 for the year, minus our cost, total income, revenue, gives us $11,000 or 9.173%. So let's just say, for instance sake, that we want to get to this 15%. So I've just done a little math to work out, okay, well, what would I really need to do to get to this 15%? So I went up to $130,000. I left our cost of business the same. So all we did was talk to the clients a bit more. So we just added on extra services instead of adding on cost for marketing. That's the percentage I want, is 19,500 of 130,000. 720 jobs a week. Job cost is still the same because it's the same 43,000. So our weekly cost is the same, our hourly cost is the same. We now put in $30 on, $52.40. So our weekly cost is still the same. Our actual cost for the year is the same, but our margin now is different because we've taken in 130,000 with 21,000 in actual margin left over, net profit, which gives us 16.16%. So I've made it to my 15%. So now I can put a staff member on if these numbers add up and I get my 15%. So down here, These are just numbers that you can play around with. Now, these are the numbers, if you've got these numbers already from past years, put these numbers in. So let's just say in 2016, 2017, you made $120,000. It cost you $109,000 to make that. So that gave you $11,000 profit, or 9%. You did 520 jobs for the year. That was your cost per job, cost per week, cost per hour, which leaves you that much left over per week. Again, the next year, you did $165,000 in work, cost you $115,500 this year. So the cost of business come down, so maybe you didn't buy as much equipment, or you already had some left over, so you didn't have to buy it. So your net profit went up to 30%. You did a few extra jobs this year to get that extra money, so you did an extra 39 jobs to make that extra $35,000. So that means each job cost you $206, or $3,000 per week, or $77 per hour, but now you have $951.92 left over. Okay, so let's do this again. So 2018-19, let's say you did $172,000. Okay, it cost you $112,000, $321 to operate. Just making up numbers. So we want to find out the difference now. So we go that minus this number is going to give us our profit. To get our percentage, how we do that is we go equals, and we go this number divided by this number will give us a percentage, so 35% profit. How many jobs did you do? Let's say you did 587 jobs. So it cost you $191 per job, $2,870 per week, or $71.76 per hour, with a weekly profit of $1,147.67. So see how you can do that? So you just add your numbers in here, you change these numbers to your numbers, and that'll give you your numbers. And that's going to give you a good idea of where you sit. Do you sit comfortably? Are you overstretching trying to put an employee on? Can you afford an employee? Okay, so that's what this is about.